welcome. You're watching Closing Trades on ET Now. I'm Anisha, Jain. With me is Ayesha, Faridi. And for the markets at the moment, it's a bit tepid. However, from the lowest point of the trading session, we have managed to recover almost 50 to 60 points, but not big moves happening today, at least at the index level. We have been fairly quiet around that 17,730 mark. The market is a tad bit tepid as well, given there are big cues lined up for tomorrow. Of course, overnight we'll get the commentary from US Fed Chair Jerome Powell, and then tomorrow the RBI Monetary Policy Committee meeting outcome is there, where it's widely expected there's going to be 25 basis point hike, but the change in stance and the commentary would really hold the key. Separately, if you look at the stock-specific action, ITC is under pressure today, a cut of almost 3% there, with reports of possible government stake sale. And that is something that is probably putting pressure on the stock with the entire supply fears coming into the forefront. And that's the reason your Nifty FMCG index is lower. Having said that, the bank Nifty is definitely outperforming today. So the banking index is the one which is managing to hold on to the green. And there has been a stellar recovery when it comes to the Adani Group of stocks as well. In fact, 7 out of 10 out of the Adani Group stocks have managed to move into the green. Adani Ports obviously has come off a tad bit after it reported a muted set of earnings, but Adani Enterprises up a solid 15%, as well as Adani Wilmar, etc. have managed to move in the green, and a solid recovery from the lowest point on Friday. There was a level of around 1,000 on Adani Enterprises. It's now staring at what, 1,800, 1,900 in a couple of days. People who bought at that level have made $800-900 bucks.
Absolutely, almost
if
touching
you had.
that. If you dared to.
Yeah.
1,800 bucks is where Adani Enterprises is today, 13.5% higher on the stock price. There's Intellect Design Arena looking smart, Navin Fluorine, Petronet LNG, and Tata Chemicals. It's an interesting bunch of movers out there. Again, you can't really draw any trend over here. On the flip side, though, weakness for metals continues. Tata Steel still under pressure after its earnings, even though they've said that the European business margins are going to be better in terms of what they did in the third quarter vis-a-vis the fourth quarter. But to say that right now they're out of the woods, they can't really say that yet. But we will, play out a soundbite of the Tata Steel management. They did speak with us about their numbers, so we will get that perspective for you. Of course, there's Hindalco as well. Novelis' weak performance weighing heavy on Hindalco as well. Hindustan Zinc and Vedanta, the company has issued a clarification stating that the transaction was approved by the board on the 19th January itself, and the proposed transaction is an attractive opportunity for Hindustan Zinc to grow and increase its foothold overseas and take its brand globally as well. So these are a couple of stocks in news and the kind of moves that they're currently seeing. Paytm, that continues to hold out, still holding up 6%. It's above its 50 as well as 100 DMA as well. Clearly, the markets have liked the fact that they've managed to outdo their guidance and turn EBITDA positive ahead of schedule. A double-digit EBITDA growth is what they've posted. And the CEO is saying that they're pretty focused on regulatory management as well. That's the word from Paytm, and that's something that the market is liking. Not such a great earnings set for LIC Housing, which is why the stock continues to languish. But let's talk about the trade so far. Kunal as well as Naresh. We also have Tata Chemicals to talk about the fundamentals of the market. But Kunal, let me come to you first. What do you make of this kind of ranged day again?
Well, I think it's at par or at course for the indices. We were expecting the index to remain in a range, and the 17,700 mark broadly in futures to act as a major support. I think we bounced off from those 17,700 odd levels for the index futures, and similar is the case with the bank Nifty. We were expecting 41,350 as a major support for the index over the intraday basis, and those levels have been held on. It's just that the action, rather the markets are not getting any whiff of any kind of a trend because of the lack of leadership from across any major sectors. So, for example, a few days back you had the auto stocks doing pretty well. A couple of days back you have the IT index, which was showing signs of a strong recovery. But then there is no major follow-through price action into these stocks, or rather into these sectors, and that's one of the reasons why the indices are trading into a range. So I believe it could probably be a sense that the markets are trying to absorb all the news flow surrounding individual stocks, as well as trying to just about mitigate the the global cues as well. So I think 17,700 is a near-term support, and till the time we trade above this, the short-term outlook remains positive.
Okay, short-term outlook remains positive. Naresh, what's your sense on the market? Because Bank Nifty is outperforming today. Do you expect this trend to continue in the near term?
So what we are seeing as of now in this range is one day you'll see Bank Nifty outperforming. Yesterday it was small caps outperforming, and this continues. But till the time we are in this band of 17,400 to 600 on the downside and 950 to 18,000 on the upside, we remain pretty stock specific. Once we cross beyond this range, that is where a next 500 pointer move can come in. So as of now, in this range, one has to be stock specific, more focused on the mid cap and the small cap side of it, or leadership sectors as such. But time to be more stock specific till the time we are in this band.
That's a take coming in as far as Nifty Bank is concerned. But Siddharth wanted your take regarding what's happening in Paytm and a couple of other these new age tech platforms. Do you think there is now a value emerging, given that the promoters are, rather the founders have now become quite conscious with respect to profitability?
Anisha, yes, I think market has given a strong point to some of these new age companies that profitability is the key for valuation, and that we have seen across spectrum of companies, be it the so-called consistent compounders. We have seen that the extra, or you can say the premium valuation for those companies have come down with the fall in the growth. So same goes with the new age companies. Profitability was the key. Paytm had guided that they would turn EBITDA, adjusted EBITDA profitability by September of next year, next financial year. But they have done that 2-3 quarters ahead in time, and they have given out a strong guidance in terms of the profitability for the future period. The focus remains on the businesses segments which would drive this profitability. Also, in terms of the cost, as we see, the contribution margins have improved to 51% from 31%. They have focused on reducing cost, the customer acquisition cost, the marketing spends. So I think overall that is a good trend for at least Paytm. Some of the other new age companies will definitely have to wait and watch the margin trajectory, the profitability trajectory, and once that is out, I think then the market would react. But definitely a good quarter from Paytm.
Siddharth, we'll come back to you in a bit, but before that, let us take a quick break with the news that the Nifty is just almost moving into the green. We'll track that when we come back.
Back with closing trades right here on ET now, and let's welcome on board Mr. Jain, who is the CFO at Motherson Wiring, and Mr. Anurag Gehlot, the COO as well. Mr. Gaba, afternoon, if I could start off with you. Your numbers on an operational basis have been weaker sequentially, and even margins have fallen. Help us understand what led to this.
First of all, quarter 3, as we have seen traditionally, is always lower compared to quarter 2 because of less number of working days by the OEMs. So we have to also supply as much as OEM wants. So the second part, which you have also heard from the OEMs, that there have been supply chain issues which forced some of the car makers to produce less number of cars. At the same point of time, when we look at our quarterly results on a sequential basis, we have improved our EBITDA from 10.4 to 10.6%, even with a lower turnover.
No, sure, on a sequential basis, you managed to improve your margins, but it's still around that 11% or below that mark. Now, in Q4, do you expect pressure to continue on the margins, Mr. Gauba? And what's the margin outlook for the next 12 to 18 months?
While we do not guide specifically on the margins, but what is important is what has changed from the last year, because as you would have read in our commentary, we have already developed a lot of products. There have been 11 new models, new face, altogether new full changeover of the models which has come, 4 facelift which have come during the first 9 months. So what we have done in order to make sure that there are successful launch, we have added the capacities. We have added close to 7,000 people compared to the last year. And the capacities may not be fully utilized, and therefore the margins may not be strictly comparable with the same period last year. But at the same point of time, as we look forward, these capacities have been built based on the customer's indication of their volumes. We do see that these capacities will get better utilized in the coming months. And we do hope by Q1 of next year, all the capacities will get optimal utilization.
Okay, a lot of heated arguments there on the Adani saga currently on in the parliament. In fact, let's take it across. You have the opposition members, even Rahul Gandhi, talking about what's going on with the Adani Group.
आप ऐसे बातें नहीं कर सकते और ये गंभीरता को समझिए डॉक्यूमेंट्री प्रूफ दे देंगे अब आपने जो पिछले स्पीकर थे उन्होंने फॉरेन पॉलिसी की बात की हम भी फॉरेन पॉलिसी की बात करते हैं चलिए डिफेंस से शुरू करते हैं बहुत ऑप्शंस है आप बताइए कहां से शुरू करें बिजली डिफेंस बहुत ऑप्शंस है डिफेंस लेट अस स्टार्ट विद डिफेंस अब डिफेंस में अदानी जी का कोई एक्सपीरियंस नहीं था जीरो एक्सपीरियंस कल मैंने प्रधानमंत्री को एचएएल में देखा प्रधानमंत्री जी ने कहा कि गलत आरोप लगाया मगर रियलिटी तो यह है कि एचएएल का जो कॉन्ट्रैक्ट था 126 हवाई जहाजों का वो अनिल अंबानी को चला गया और अनिल अंबानी बैंकरप्ट हो गया वहां भी फैसिलिटेशन था अब देखिए और ये जो फ्यूचर एंटरप्रेन्योर्स हैं जो बिजनेस स्कूल हैं हार्वर्ड यूनिवर्सिटी जैसे स्कूल हैं इनको इसका केस स्टडी इसकी केस स्टडी बनानी चाहिए शायद बने हाउ टू यूज गवर्नमेंट पावर टू बिल्ड इंडिविजुअल बिजनेसेस केस स्टडी तो अब देखिए अदानी जी की डिफेंस में इंटरेस्ट देखिए एल्बिट कंपनी के साथ
The entire discussion as far as Parliament is concerned on the Adani Group and opposition really raising some questions there, but that doesn't seem to be impacting the stock prices at the moment because Adani Enterprises continues to be higher by around 15% and the other group companies like Adani Wilmar, etc. are also logged in upper circuit, a 5% gain there. The markets too are just moving into the green, so 17,760. Let me put that point across to Siddharth as well. Siddharth, if there was somebody who was a big risk taker on Friday and bought into the Adani group of stocks, maybe the likes of Adani Ports or Enterprises, they've already made a huge amount of money from those lows. Even for those who want to probably look at it now, do you suggest this as a big risk-reward play?
See, Anisha, I think the issue is far from resolved. Yes, the stock prices seems to have stabilized after the assurance coming in from RBI that the Indian banking system is not at risk. Even the regulators have come out as well as the government giving out statements that things are pretty under control. And on the company side, we have heard statements and assurance that they have returned the FPO money, they would be repaying a lot of debt which are backed by shares pledged. So that risk is getting off. But the key question continues to remain that what about the growth capex that they were looking at? So while we don't have an official coverage on the Adani Group, I think the issue could continue for a long while. Yes, for risk traders, you can look at the data based on the delivery volumes, the futures and options, and based on that, one can take positions. But very difficult to suggest, given that apart from two companies, all the other companies are on circuit-based filters. So yes, some of them have opened up today, but if some other bad news were to come, they would again hit lower circuit. So I think apart from very high risky traders or intraday traders, I think it's pretty better to avoid the group as of now.
Okay, that's the take coming in on what the Adani names are up to. Paytm, that clearly is the story of the day, isn't it? That's the one which is actually holding out quite smartly. In fact, let's just bring up this entire, fintech lot. What a Paytm, what a Zomato, what Policy Bazaar, that's PB Fintech as well as Nykaa are up to, and whether they are seeing any recovery or not. Paytm, of course, is after its earnings, and more so actually after what the commentary in the conference call was, the fact that they're saying that EBITDA profitability may actually become two digits soon. They expect sustainable EBITDA profitability, and that regulatory risk management is going to remain top focus for them. The fact that they are saying that no incremental guidance for free cash flows going forward, but investments will continue to be there for both growth as well as marketing. But I think more interesting was the take from Dipinder Goyal on Paytm.
Definitely, there was a fun tweet there wherein he was congratulating Vijay Shekhar Sharma and saying we are also on the path of profitability. The question is,
sorry, I missed the tweet. I was busy.
Busy on that, yeah. Working on that, but hopefully the investors are able to see that soon, because for now that remains a bit of an overhang on some of these counters. But just shifting focus away from that and talking about the banking sector as well, because let's pull up the intraday chart of Bank Nifty. That's seeing a sudden surge at the moment. It's suddenly up around 200 points, and it's names like AU Finance Bank, which is up 2.5%, Kotak Mahindra Bank, IndusInd, even HDFC, etc. I think they're off their lows tremendously, and the entire market is actually moving higher. Kunal, your take as far as the Bank Nifty and its constituents are concerned? IndusInd Bank, etc. have been doing quite well.
Yeah, I think they've been doing quite well. It's been a good recovery for IndusInd Bank from 1020 odd levels to scale past back again about the 1100 plus mark. In just a matter of, I think, few trading sessions, requires almost a V-shaped recovery. So, good bit of buying which was seen in IndusInd Bank. Even ICICI Bank, I think, has been a good recovery. Has seen a good recovery over the last 1 week. HDFC Bank somehow has gone to a trading range back again. So, I would probably wait out for a breakout for 1700, 1720 mark for HDFC Bank before taking a fresh call over here. But I think as of now, the two components from the private sector banks which look very attractive would be IndusInd Bank as well as ICICI Bank.
The one stock which continues to reel under pressure, though, is definitely Tata Steel. That hasn't seen any marked recovery. It started off gap down, and from there, it continues to see pressure even now. In fact, let's hear out. I just chatted with Mr. TV Narendran, the MD and CEO of Tata Steel, just a short while back, wherein they said that margin expansion is in store for the India operation, but the fact that they're out of the woods right now, that's something that they can't say. Let's listen in.
Margin expansion has started happening in India because the margins were at its lowest level, let's say in November, because prices dropped from October to November, started picking up in December when the international prices started going up. So we expect margin expansion to continue, but all the price increases will not flow through the bottom line because there are cost increases. May not be for this quarter. So this quarter, we expect the coking coal consumption cost to be about $10 per ton lower than last quarter in India. But we are seeing that next quarter, that is Q1 of next year, some of the higher price coking coal, because today coking coal prices are in the $320 to $340 range, whereas it was about $250 to $280 range 2 months back, right? So that will start flowing through in the Q1 of next year. But overall, we see volume expansion and margin expansion continue in India.
Okay, so if I have to specifically pinpoint prices, domestic prices are currently at, say, about 59 to 60,000 odd per ton. Could they head to 65 to 70? I know I'm trying to put you in a spotlight here.
I think Ayesha, it will depend a lot on the international markets. What happens in China after the Chinese New Year? If it comes back strongly, that will give a fillip to international prices. You would have also seen that most of the steel industry in the world over the last 2 quarters was struggling from a bottom line point of view. So we pretty much hit the bottom as far as margins are concerned for the industry. So everyone is looking at improving the margins. So it's going to reflect international prices, but clearly we are at 60,000 levels. As you know, it had gone to 75. We don't expect things to go to that level. But I think between 60 and 65 is certainly a range we are looking at.
So that it's actually the European operations which have hit Tata Steel this time around. Just wanted to understand, because the management has gone on record and said that, they do hope that Q4 is going to be better for the European operations than what Q3 has been. And they do expect volume and margins expansion to continue when it comes to India. But that said, is this the time to buy into the metal names when the news flow is not as positive and the stocks as well are much cheaper than their previous highs?
So, Ayesha, I think while the Indian business is showing some resilience, the overall outlook is not that strong, and especially after the management guidance, the Q4 numbers doesn't seem to excite too much. Steel prices have definitely moved up on a quarter-on-quarter basis, but as the management highlighted, and as we have seen that raw material prices, especially if you look at specifically the coke prices, petcoke prices, that have also inched up. So that will not flow too much into the overall numbers. The impending slowdown or the so-called recession in US, Europe, that could impact the demand outlook in FY24. So I think current valuations at 5.3 times FY24 EV EBITDA and 1.2 times price to book is kind of fully valuing the current scenario. Hence, currently we have a neutral rating and outlook on Tata Steel. I think it's not one of the best times to add into these names. The weakness could continue for some more time.
We let you go on that note. Thank you so much for joining us today. Taking a look at the market, and there's a solid recovery underway as far as the bank Nifty is concerned. So let's try and understand, is that something which is there on our chartist mind as well? Nuresh, with respect to the closing trades, what are you executing?
So looking at again a banking name, which is basically Kotak Mahindra Bank. The stock has started showing some strength today, and it is very close to the support levels. Should see more momentum above 1790, 1800 levels. So that's a trade which I'm looking out for and expecting an outperformance in Kotak Mahindra Bank going forward.
So Kotak Mahindra Bank, and that's definitely making a move. I'm not sure, Nuresh, is it the volumes of the trade that you have executed that have, made the entire bank Nifty run into a bit of momentum? Kunal, are you adding to that?
I'll add on to TCS. I think my belief is that the IT stocks would probably make a comeback again, and specifically the larger cap names. So I think TCS is something which I would bet on.
Okay, on that note, slipping into a very short break. Don't go anywhere. When we come back, we'll track the last 30 minutes of trading session. For last 30 minutes of trading session, and it's surely quiet ahead of those big events which are lined up. So for tomorrow morning, we'll of course get the commentary from Fed Chair Jerome Powell, and then again the RBI rate decision will be tomorrow. But separately, you have a whole host of earnings also to deal with. There's no big Nifty number, but there are a lot of large, mid caps and the F&O names. So for instance, Shree Cement comes out with its earnings tomorrow. Escorts, Trent, Adani Wilmar, Cummins, Minda Corporation, Adani Power, Piramal Enterprises and Pharma, Motherson Sumi. These are some of the counters which will be reporting earnings tomorrow. And there is a fundraise board meeting which is happening at a few companies. So Godrej Agrovet, Himmat Singha Seed, Motherson Sumi and Piramal Pharma. These are the companies which will be in focus on account of the board meeting to raise funds either via debt or equity or any other means. And separately, in terms of the stock-specific action, wanted to flag out Varun Beverages. It has been doing quite well for the last couple of trading sessions. It's broken out from a key pivot level. Bank of America today recommended a buy, and they believe there's a 20% upside from the current market price. And even if you look at reports coming in from the likes of IFL, etc., post the earnings and the positive commentary on the con call, they have upgraded the targets by 6 to 7%. ITC is the other stock in focus that's formed bearish belt hold candlestick pattern. Remember, government is probably weighing in whether they should look at selling some stake in ITC or not, and that's something which is impacting the sentiment on that one. Let me welcome on board Gurmeet Chadda as well. And Gurmeet, let's begin by talking about ITC itself. Should one look at buying it at current levels? Should they book profits? What's the best way to move forward with ITC?
Anisha, thanks. It's been a good run in ITC, especially in last 1 year, and I think the quarterly numbers were pretty solid. So they had good volume growth in cigarettes, which is what they've been struggling when the stock wasn't moving. helped by curtailment of smuggling and illicit trade. I think also I think there's very good growth momentum in FMCG business. I think there's a fair chance of the margins now getting into double digit as they do premiumization, and the commodity prices also ease. So I think while they've been doing very well in staples and convenience, I think on ready to eat and discretionary is where there's a lot of focus now. Paper also continues to do well. Hotel, though a small segment, but I think the bigger re-rating, as I've been keep saying, is when there is some kind of monetization or delisting in hotel and FMCG business. I think that's where the bigger trigger will come. Otherwise, I think it's one of the most reasonably valued FMCG stock in the basket, still at about 21, 22 times forward, 4% kind of dividend yield. So a pretty steady stock in the portfolio. If there is any selling due to supply pressure, either government reducing stake or something else, maybe could be a addition on further dips.
Gurmeet, hi, afternoon. Just wanted to understand a couple of these other newsmakers as well, and especially the kind of frenzy that one is seeing in Vodafone off late, where most retail investors feel that a price of $8 to $9 is cheap and therefore they should be buying. And spurts like yesterday, of course, maybe get their conviction only stronger. Just wanted to understand, what is it that you're making of the whole government backing Vodafone story now?
See, I said this could be good news for banks if banks own 33. Government owns now technically a third of the equity. I'm not sure about the share price, and I think till the time I see any operational improvement, they need growth capital, number one. I think which is still not done despite various announcements. Second, they've lost like 20 crore subscribers in last couple of years. They just keep losing 20, 30 lakhs every quarter. The number of retail investors, I actually tweeted about it, has gone up from 6 lakhs to 30 lakhs now. I would not, till the time they get growth capital and they arrest the fall in subscribers. I think Bharti is far better play. The 4G additions have been very healthy. For the first time, probably now they will make more cash flows because the annual outgo due to the AGR and other spectrum dues is less than what they will make in EBITDA. Also, I think with this withdrawal in minimum recharge from almost 18 circles now, from 99 rupees to 155 now, I think signals very strong intent towards increasing ARPU. So I think it has all the right ingredients and more reasonably valued also. So would prefer that, unless Vodafone gets a growth capital and substantial growth capital. I don't think so. I'll be looking at that.
Okay, not a big fan when it comes to Vodafone Idea, but since we're talking about the telecom sector, let's flag out the expectations from Bharti Airtel as well. The numbers are expected anytime now. As far as revenue is concerned, we are expecting a growth of just around 3.5% on a sequential basis, though the margins are expected to improve by 120 basis points. The ARPUs are expected to jump up by 2%, and we are working with a number of around 194 as far as ARPU is concerned. The Indian mobile EBITDA is also expected to jump up by around 4%, and the subscriber base we know is around 33 crore, and that's expected to be around that as well. In terms of the management commentary, early trends which are emerging from the initial 5G rollout will be important to track. What are they doing with respect to their capex intensity, as well as what happens to the tariff hikes going forward, are the key monitorables as far as Bharti Airtel is concerned. But in terms of the other stock moves, there were a lot of result reactions that were actually trickling in. Let's see how the stocks are reacting. Because for Mrs. Bector, the revenue jumped up by around 40%. For Power Mech, there was a profitability jump to 51 crore versus 33 crore. So some of these stocks were reacting to that. And there was quite a bit of disappointing number coming in from Bharat Dynamics, wherein the profitability really eroded. It was 84 crore versus 213 crore last year. And the margins too have slipped to sub 20% versus 36%. And Gurmeet, this continues to be the problem, whether it is, let's say, Bharat Electronics, for instance, wherein the order inflow have been much lower than expected, a far distance away, a far cry away from their own guidance, and for Bharat Dynamics as well, a very poor set of number coming in. And this is after the street has baked in a lot in terms of earnings growth.
Yeah, so that's always the risk when you look at the so-called, I mean, right now the defense stocks are the flavor. Only looking at the order book can be misleading, because you need to see the milestone payments, how the execution happens, how the commodity prices behave. So so we are looking at more at solar and HL in this particular space, which where probably the in solar, in for example, the defense is still sub 10%. It's more industrial chemicals, and that book is nicely shaping up. It's adding 1 or 2% incrementally, the defense book, and it's more fast moving consumable defense order book, which is more hand grenade and Pinaka rockets and etc. versus where you have fighter jets etc. where the gestation periods are pretty large. HL again, because more than two-thirds of the revenue comes from maintenance overall and spares, which is a 35% EBITDA margin business, versus others which are 15-18%. So they get a blended margins of about 25-26%. So and you need to probably have a slightly longer term outlook. Also, the way these stocks turn up, I think some consolidation is reasonable.
Gurmeet, where are you putting fresh money to work apart from solar industries and HAL?
So as I said, I think one area which continues to do well, report good earnings, very good credit growth is banks. I think the pressure on banks due to conglomerate being under pressure, I think looks a little overdone to me in a lot of pockets. So we are adding banks, continuously since budget. I also think next 2-3 quarters the earning momentum will be very strong, and the kind of contingency provisions most banks have done, even the future credit cost and any shock should be contained. I also think some NBFCs have been out of favor largely because too much focus being on banks and concern being cost of funds. Some NBFCs actually are containing cost of funds very efficiently, and they continue to grow credit at 25-30%. So we are looking at something like a Poonawalla, Fincorp, Chola, etc. In that space, and some FMCG names. I think you will see some uptick in rural, with government also being very focused, and raw material prices softening, and I think the valuations have become so this. I think the entire crux in this market looking at something like a Poonawalla, Fincorp, Chola, etc. In that space, and some FMCG names. I think you will see some uptick in rural, with government also being very focused, and raw material prices softening, and I think the valuations have become so this. I think the entire crux in this market is you don't have to overpay, because interest rates are high, and I think if you do that, start with risk management first. I think returns will be taken care of.
Gurmeet, can't help but ask you about the turnaround quarter from Paytm. Getting conviction there?
Not really. The reason is that if you see their bulk of the numbers are coming from the loan piece where their take rate is 2.5-3%. So out of almost 9,900 crores loans they dispersed, more than 5,000 crores is postpaid and buy now pay later. Which in my view you need to see one credit cycle on NPL. I think disbursements growing at it's almost like 30% quarter-on-quarter growth on loan disbursements. So I think we should not get carried away there. But I like the fact that now the focus is on being EBITDA positive. They are 2-3 quarters ahead of EBITDA less ESOPs. It's difficult to evaluate these terms also. But I like the fact that they are being very transparent about that. On payments, their take rate is 7 to 9 bips. On active devices, it's about 100-125 rupees subscription fees. On collections, it's about 1%. On loans, so they've been very transparent about it. On their working towards free cash flow, which is heartening, I think. And we saw today some friendly banter between Zomato and Paytm on how to become more profitable. So I think it's a good sign. But I would probably wait more and maybe a couple of quarters to see if directionally that's being achieved.
Okay, let me go across to Naresh and talk about some of these price volume buzzers as well. There's Triveni Turbine, which is moving on heavy volumes today. There's JK Paper, which is a bit of a reaction coming into earnings. Same with LIC Housing Finance. And then on the gaining side, you also have Varun Beverages, which is now up around 7.5%. What catches your fancy, Naresh?
So that would be Triveni Turbines, given that anything related to capital goods and ancillary has been doing really well. And Triveni Turbine has been a strong uptrend in the near term. It's gone up from 160 to 300 and then consolidated for the last 4 months. Today's price volume action is very interesting. It again takes it back closer to that 300 resistance, which was the top for the last 3 months. If it can sustain about 300, that would be a fresh breakout. But Triveni Turbines, overall, the trend is good. So it's a buy on dips going forward. The rest of the names not very exciting. JK Paper again has come back to the same zones. Till the time it doesn't cross 430, 450 on a closing basis, does not look like a breakout, but on radar. But overall, Triveni Turbines looks the best one out of all the names.
Let's get some BTST trades as well going. Just 15 minutes left to go, less than that actually. Before we wind up for the day, Kunal, on your list?
So two buy calls from the mid-cap, small-cap space. First one is about Motherson. That stock has made a very strong comeback, broken past about the 200 DMA for the first time, I think, in the last 12 months particularly. So that's a strong comeback for the stock. Would suggest a buy with 88 as a target. Stop loss could be kept at 75. And Bector Foods, a stock which we discussed in the morning, Chartbusters as well, looks very attractive. The stock today has now broken past about the strong psychological 500 mark. Very strong volumes, consistent price action over the last 6 to 8 months. Would suggest a buy with 520 as an immediate target. Stop loss at 470.
Okay, just wanted, before I go to Naresh for the BTSC idea, let me also get the numbers of Ambuja Cements up for you on the screen, because overall it looks like it's a decent set coming in. The net revenue is up 11% and has come in at 8,036 crore. The profitability is at 488 crores, and I think it's much better than what we were expecting, because our expectation was around 300 crores and the volume growth is quite solid as well. 7% quarter on quarter. They are saying that the company remains net debt free. The cash and cash equivalents on the book is to the tune of around 9,500 crore rupees, and this augurs well for company's accelerated growth plans as well. In terms of the other details coming in, the cost reduction efforts is something which is helping their EBITDA profile as well, because the operating profit and the margin has actually come in from 6.5% to 14.6%. So actually, even on an operational basis, there's an improvement coming in. Just going through the commentary of the management as well, wherein Mr. Ajay Kapoor, the CEO, talks about the fact that the business initiatives are expected to further bring down operating costs, reduce clinker factor, as well as expand EBITDA margin. They expect cement demand to further grow in the coming quarters on the back of increased infrastructure activities. So overall, it looks like it's a positive number coming in from Ambuja Cement, though at least the stock is not reacting much. Okay, so the profit figure is 369 crores. We were working with a number of around 300 crores. Naresh, your take as far as the entire cement pack is concerned?
So Ambuja Cements looks interesting. Like we've discussed, it is back to that 320, 350 mark was where it was before the whole Adani takeover, etc. happened. And the stock came back to those levels and has been tested. And the bottom is done, and slowly and steadily, I would expect it to go towards the 420 mark first and then towards 460. The stock becomes a buy on dips going forward. So I would expect 350 to 340 to hold on. So looks interesting even on dips from here on.
Okay, and what about the BTST ideas then, Naresh?
So first is the buy on Kotak Mahindra Bank, starting to show some bit of resilience and a relative outperformance. A stop loss at 1760 and a target price of 1820. Second is a buy on L&T Finance Holding, which is holding on above the recent last 3 days highs. Stop loss at 88 and a target price of 93.
Right. Okay, those are some BTST trades coming in. For the margins as well, Ambuja has seen a fair amount of expansion, about 17.5% versus 16.4% that they clocked in the same quarter last year. Volumes as well have seen an uptick of about 7%. At about 13.7 MTPA on a sequential basis. And, you know, to be fair, in this fall that you've seen in the Adani group of names, Ambuja has actually fallen a lot less than its other counterparts. But yeah, that's a specific story altogether. Ambuja aside, let's just see what else has been holding out in the market, and of course, besides Adani Enterprises as well. So Intellect Design, Petronet, Ramco Cement, Naveen Fluorine, these are all names which are actually holding out in trade right now. Kunal, the underperformance for cement as a pack has stretched for a while now. Do you now see these stocks finally waking up?
Not really. I think, you know, cement stocks, they tend to do pretty well in the best of the market times. And right now we are, as it is, in a zone where the markets are struggling because of lack of leadership from the prominent names or the higher weighted sectors. For example, the likes of banking, financials, you know, IT, energy, etc. These are the sectors which hold a lot more prominence. And these sectors have just not performed, you know, consistently over the last many months, and that's one of the major reasons why the indices have also not been able to give any kind of a major breakout. And I think in that kind of an environment, cement stocks, they generally tend to not show any major kind of follow through. You might have individual stocks which can do pretty well. For example, Tata Cement has been holding on to that 7,000-ish kind of a mark for the last couple of months. Shree Cement went into a sharp correction, has gone to a recovery. So the larger cap names have done reasonably well. ACC Ambuja, after the stocks being into the news flow as such, these stocks have also recovered. They have been, of course, less damaged as compared to the higher beta peers, but then I think the recovery for these stocks have also been more stable. But I think Ambuja Cement is something which I would believe, if the stock stabilizes, say, above the 400 mark, I think something which I would probably look out for a short-term trading play, but nothing major in terms of a trend changing for the entire cement sector as such.
Okay, so trend is not changing, but at least Ambuja Cement is holding up comfortably in the green, as we talked about. I think there are two key positives in the number. One is the fact that the volume growth is much better than expected, with a growth of around 7% sequentially. And secondly, on the EBITDA margin front as well, there's a big improvement. In fact, if you look at the per ton EBITDA, it's improved to 829 per metric ton, and that compares with 340, which was their last quarter. So a big jump as far as quarter-on-quarter performance is concerned as well. And both in terms of clinker as well as cement volumes, they look quite strong, and the capacity utilization is around 81%. Going forward, the management still talks about demand being strong, cost optimization leading to further growth, further upside on the margins, and the capex plans being maintained for now. So that's one stock which is there on our radar. Let's take a look at what else is actually buzzing. Zomato, I think apparently after the tweet came in from Dipinder Goyal, the street is probably baking in a lot with respect to profitability as well. Kunal, your take, Zomato?
Yeah, I think it's recovered quite well from 48 rupees to now 50 plus levels. I would expect that this could probably be a start where many of these new age companies, they could probably get a lot more buyers interested into this pocket. So even the likes of Fino Payment Bank, etc., these stocks have also stopped falling, and these stocks are getting into a bit of a recovery phase. Nykaa, I think, as well, is getting into a bit of recovery, 132 now 140 odd levels so far in the last 2 to 3 weeks. But I think we would probably expect that this could be a momentum which could be at play. Now, it's very difficult to call in when would the momentum subside for these stocks. So it's always best to try and trail stop losses for someone who's looking to buy these stocks and hold on to it from a trending perspective.
Gurmeet, is Paytm giving any hope on what a Zomato, what a Nykaa, etc. could do?
No, as I said, Ayesha, I'll be in businesses where there are cash flows and earnings for now, at least in an environment like this, where I keep saying cost of not doing anything is 7.5% in a government bond. So I would stick there, and there's no new age old age here. I mean, if it's the way Paytm has shown any bit of profitability, if you see trends emerging, happy entering a little late, joining the party a little late.
Not having that FOMO moment, at least as of now. And just a couple of other important announcements for Ambuja Cement, wherein the company says they are considering appointing in-depth agencies. And this is independent. Oh, okay. So I just thought that it's a name of an agency for
independent.
Okay, so independent agencies, and that's to assess the actions needed after the Hindenburg report. So that might just lend some sort of support to the stock price as well. But separately, what else is buzzing around in the trading session? I think the numbers coming in from Ambuja has definitely given a leg up to Nuvoco Vistas as well. I think the company already reported numbers yesterday, but that stock is excited at the moment. You also have Gland Pharma, which is suddenly spiked around 12-13%. And then, of course, the names like Zensa Tech, Adani Wilmar, Rolex Rings are some of the other names that we're watching out for. Hero MotoCorp also reports its numbers today. So quickly, before we let you go, Gurmeet, a take as far as the overall two-wheeler industry is concerned. Any top bets there?
So we like TVS with the way they've changed capital allocation. I think there is a premiumization playing out. Their average selling price has been steadily moving up with a nice product mix and very calibrated price hikes. If you do their iQube numbers, which is the EV thing, I think they're already now planning to hit 10,000 units a month. So that's playing out very well. And then you have this captive MBFC within there. So I think that's one thing we like in the two-wheelers. But first preference is more four-wheeler OEMs and some of the auto ancillaries like Uno Minda.
Right. Okay. Gurmeet, great to have you on the show as always. We'll let you go on that note. Have a good rest of the day. Let's begin winding up trade. And we're closing pretty listless, but that's okay. We're not complaining. What you're seeing are not really jagged edges because it's a very narrow band that we traded in from the highs to the lows of the day. Kunal, before I talk individual stocks, just a quick call on what the trading move today is telling you.
Nothing in terms of an index. I think it's still lackluster. I think the only pattern which I'm seeing consistent over the last 3 days is intraday dips of in the magnitude of 100 to 150 odd points on the Nifty. Those dips are being bought into. So, I mean, as a trader, you have to be a lot more opportunistic than what you were earlier, and you have to wait out for those intraday corrections as a good buying opportunity rather than buying them outright when the SGX Nifty indicates an open.
Okay, and the big star performers today, clearly Adani Enterprises with that 15% uptick. There's also been Zomato as well as Paytm. Both those stocks have spiked up quite a fair bit as well. Paytm, of course, seeing a reaction to its earnings. Intellect Design Arena, 5% higher. Navin Fluorine, almost a 4% move. Petronet LNG, 3.25% higher. ABB, up 3% as well. There's DRL, Adani Ports, Kotak Bank, IndusInd Bank, which has seen some follow through from yesterday. Not so much for an SBI, it was fairly listless, but Bajaj Finance managed a green close of about almost 1%. The pressure points then today: Tata Steel after its numbers, Hindalco after Novelis's, ITC down 2.5%, Sun Pharma, Hero MotoCorp, Tata Motors, Maruti. A lot of the auto pack was under pressure today. From within the broader markets, it was Aarti Industries down 5%. There was, of course, Idea, which after that big mammoth double-digit uptick yesterday, saw a bit of profit taking, was down about almost 5% or so. There's also been some weakness coming in today in a Metropolis, 3.5% lower for this stock too. But that's pretty much it when it comes to the broader end of the market. Some of the OI movers, Syngene, which closed in lower by about 1.5%. Navin Fluorine, like I mentioned earlier, stock gained, closed in at the session highs. OI build up nearly 31%. Deepak Nitrite was pretty active, so was Motherson, a stock that Kunal as well was highlighting, closed in with a gain of 2.5%, 80-60 on Motherson futures. And then LIC Housing Finance, disappointing earnings, stock closes lower, 3.25%, though off from the day's highs. So it's really been one of those sideways kind of session where you can't really drop any trend in terms of, Anisha, which stock has moved where. I guess tonight, when you hear from Jerome Powell, that is going to perhaps give some direction to global markets at least.
Oh, well, yes, and for the Indian markets, we'll of course have to hear what the RBI governor has to say tomorrow. So that will also be interesting. 25 basis point is penciled in, but with respect to the stance, that will be important. Plus, whether what Fed chair says with respect to disinflation is something that will be mirrored in India or not. That will be interesting to watch. But for now, we're going it a bit tempered into those big events. 17,700 is what Nifty has managed to hold on to. It was Realty that was doing well in the trading session today. But apart from that, FMCG, auto, metals, IT, they were all on the losing side. And overall, the advanced decline ratio also went home with the favor coming in for the declines. That's how we are wrapping up this trading session. We'll come back and talk to you about the markets tomorrow morning.